Have you ever wondered what currencies to trade to pull out of the market massive profits? Well, in this video, I'm going to show you exactly the currency crosses that you don't hear of often and that you've been missing out. Because absolutely, during 2019, these are the currencies that you needed to be trading in order to take home massive profits. I'm talking about making in about 8 weeks $8,000 and more. I'm going to show you during this video exactly how to manage your risk and the type of analysis we conduct at the War Room. Welcome everyone, my name is Jose Ricardo Tejeda and directly from Dubrovnik, that's right, King's Landing, the famous Game of Thrones TV show from HBO. I'm going to share with you one of the best analyses I've been applying during the last 8 months as a part of the different techniques that I use to coach retail traders and asset managers. This is price rotation, and today we're going to study euro versus the New Zealand dollar. We are only 20 minutes from the decision of from the European Central Bank. Our clients are already positioned. I'm going to show with you a sample of how our analysis looks and how we track the success or not of the idea. And we'll go with you and show you exactly the first video that I recorded a couple months ago showing the potential 3,000 pip opportunity trading the euro versus the New Zealand dollar. Before I go any further, I want to let you know that the content of these videos for educational purposes only. No given time, this is a personal financial advice, and also there is no invitation at all for you to call a broker and start buying online assets. It's not the case. Now, we do know that you understand that we're in the age of negative interest rates, and therefore you need to do something. You need to take your risk capital. That means take a portion of your savings and go into financial markets. I'm not just talking about currencies. I'm talking about futures, options, either calls or puts, or you want to trade cash securities. I mean, buying stocks. It's pretty simple. But all the time, remember, this business, the business of trading and investing, is risky. Therefore, you need to do that with risk capital, because if something goes wrong, either you don't make all the money you expected or you lose money, it will never affect your day-to-day lifestyle. And one more thing, please, never forget, past performance does not constitute present and future performance. All right? Okay? Let's begin. Let's go over this and see exactly where we are. I'm going to go to my chart because I'm going to share with you exactly where we are right now and give you an idea with trend Fibonacci what is happening. Right now we have a massive pullback, and before I do that, let me share with you exactly where's the video. Okay, here's the video. It was recorded back in March 30th this year, and 11 likes. Someone was not happy. Apparently 4 people were not happy. So far more than 1,144 views. And during this video I was calling for everyone to forget about US pairs. Everyone wants to be on US pairs, but you need to deviate from the norm and find new opportunities. That's me. That's right. I was a rock bar, and I thought, hey, why not recording the video? So I'm gonna jump directly now. You know that was back on March 30th, and today I want to go over this. Now, I use personally trend Fibonacci because it has provided me with $1,000 trading different assets, from equities, futures, commodities. I apply all the time this analysis. But the base of everything I do comes from price rotation. This is where I establish what is happening, what happened, what seems to be happening, and what may happen in the future. So I use this just for sort of for a forecast of where I see prices moving, because they have to. Now, historically speaking, what happened here in the cross euro versus New Zealand dollar is that the price has a range between 152 to 176 and a change, sometimes actually 169. Right now we're in this rotation on the monthly chart where the price has been making a pullback, a deep pullback, close to 400 pips. Now, this is the norm when it comes to crosses. They can go retrace 400 pips, and it does not affect the trend, because if you look at this, see, the trend is up. It's pretty simple. Now, this pullback should not scare you. You still have to understand the macro view of what is really taking place. Now, we're in a rotation. Price rotation explain this all the time in the war room. Price rotation is the most powerful macro view, or I call it the eagle view, because it allows you to see the entire price action and how the asset class has been behaving for a long period of time, what we define as historical levels. This is not just a common 1 to 4 hour chart support resistance. It's not. It's historical values that they are in place by the smart money, and then you have to follow those. Okay, now once you understand price rotation, you will be in a position to determine long, medium to long-term price moves that would allow you to, 1, make more money with less stress, 2, you will suffer less, and 3, lower maintenance. We're professionals. You're a professional. In my case, I'm all day working, communicating with all type of professionals across different asset classes, from CTAs to asset managers to coaches, different. But in your case, you might be an engineer, you might be an architect, teacher, whatever, but you still want to be part of financial markets because it gives you an opportunity to multiply faster your savings, your risk capital. That's what it is. Okay. So in order to do that, you need to position yourself in find opportunities that will allow you to make a lot of money with less stress. And this is the case. So once I establish the historical values, for example, the one value that I want to share you the most is right here, this level back in 2011. That's 169.26. That's the low back in January. Well, that's the month, January 2011, and the low 169.20. That right now is our key support for the continuation of this trend. I'm not saying it may not just drop a little bit and then reverse, but this is the key level that I'm using, and as our clients already have to receive this information before you do, that's what they pay for, we already have the follow-up and when they actually got the orders. There's a little bit of a 20 pips that you can take of advantage, and I have a bonus view that I will share with all of you at the end of this video. Okay, just keep watching. Now when I go and determine the levels of price rotation, I want to know exactly where the price, the smart money decided that they didn't want to keep lower prices. In this case, that's the 152 level, and when they decided they don't want higher prices at the 176 level, we can argue was the 169. Now the most important is that the price has to rotate in this area. Why? I'm going to be big saying why. Because FX, as it is not a casino. It's a live animal. And this live animal, they need these values to conduct transactions, real transactions. So it's a real business. Therefore, it cannot move too high or too low. Now, because of the conditions of how business is conducted in New Zealand, it requires a weaker New Zealand to be attractive for those European investors. It makes more pressure, for example, in tourism, but the most important is that if New Zealand is producing something that Europe wants, then a stronger euro against the kiwi will make more sense for Europeans to buy these products. But if this currency gets too strong, then it loses the appealing. Okay? So now also there's something very important happening. So now we know that this is in place. The RBNZ, Reserve Bank of New Zealand, has been reducing interest rate, and that supports the euro. But the euro, as we know, has been struggling. So today, we knew that we needed to position ourselves. Now, one more piece of information that we got from our friend Jack Crooks from Black Swan Capital is the fact that CME Euro Futures shows bearish bets added last week. And if we understand common sentiment trading, we know that if the euro has been pushed all over the place, now any single news will make the euro very attractive, and therefore it will rise. This is very important. This is common trading techniques based on sentiment trading. So we all have all this information in place. What I needed to know from the price rotation is what is the extension. The extension from low to high or vice versa is almost 2,400 pips. That means that once prices reverses here, and that's our expectation based on everything that we have on the table, we will break the 176.60. And once prices start trading close and open above this level, then we'll have all all these opportunities to move. So in fact, you're looking at a massive 3,000, once again, pip opportunity. But we have to be realistic and we have to trade what we have in front of us. So the way we have set up this is we look for an opportunity right now of 8,100 pips. Apologies, $8,100. And those $8,100 based on the structure of the positions we have. And also to know is that we look to make this money in the next 8 weeks. That's how we expect to take this place. So 8 weeks. So that's all we were looking. And the way we're looking is that you need to have an investment or risk capital about $10,000 and you need to trade one standard and one standard. Now, as we have that, our stop loss will be at 169.20, which as I mentioned is the low. I'm going to put it here. Low of January 2011. This is key for us to understand because this is where the price, we expect the price to rotate now higher. Now, our target, they are divided. We have a first target that will retest not too far from the highs that we know, 175.70, and later the last position will be the final projection based on trend Fibonacci. That will be the 179.60. This is the chart that you need to follow to understand the levels. This is where we expect, and by not a coincidence, the 61.8% Fibonacci sits at 169.25. So it makes perfect sense with the historical level from the price rotation that we set our stop loss at 169.20. Our first target will be taking one position here. This will be our first target, which is back to the known prices and resistance at this point, and then the final projection of the trend Fibonacci. And that's how we expect to make $8,100 in 8 weeks, trading the cross euro versus New Zealand dollar. Now, I'm not just going to display the bonus idea, but I have this idea already in place for you to take a look. We expect any outcome from today's meeting from the European Central Bank to, in the short, medium term, to provide some sort of strength. Again, the euro has been under punishment for the last more than 6 months, the first half of 2019, and so far the second half of 2019. So what it means is that this is the perfect opportunity to, based on contrarian trading, take a position. And we're using a stop loss at 109, which is 14 pips below the known low for the euro. Okay, so if you have any questions, please go ahead, put your comments on the comment section of this video and let us know what you think about this trading idea about going long the euro versus New Zealand dollar. I also want to take the opportunity to invite you so you take a moment and make sure you subscribe to our channel. Market Traders Daily has been educated traders, retail traders, and private traders, and also asset managers for the last more than 10 years. And with this kind of analysis, you will position yourself in a way that you, as I said before, will suffer less stress from trading and investing. You will suffer less, and you will have opportunities that will require less maintenance, meaning that you will not have to spend so much time in front of your computer. I'm giving you time to take a look at the position, how they're developing, and in about probably 5 minutes we'll have the decision from the European Central Bank and we'll know exactly what will happen. I will come back tomorrow to give a follow-up, either it's a win or a loss, and see exactly how it happened and do a deeper analysis of this position going long the euro versus the New Zealand dollar. Thank you for watching, and I'll see you tomorrow.